Okay, hello. We are from Group 3 and our company of choice is Sunway Berhad. Okay, our team consists of me, Amir, Tihani, Yongman, Kelly, Rahman, and this is in order of the presentation. Okay, so a brief introduction about Sunway. Sunway Berhad is an investment holding firm. It consists of many divisions. Primarily, they are Sunway Property Development Division, Sunway Healthcare Group, Sunway Construction Group Berhad, Sunway Property Investing and Real Estate Investment Trust, Sunway Leisure Division, Sunway Hospitality Division, Sunway Trading and Manufacturing Division, Sunway Quarry Division, Sunway Building Materials Division. So next we'll move to the economy analysis. So when it comes to economy analysis, it's quite an easy conclusion to come to that we must look at variables such as GDP growth. However, while GDP growth and stock prices may have its correlation, using GDP growth is not a practical one because GDP growth uses the only available GDP growth data at in the present will always be historical data, which will not tell you much about the future, which does not help in anticipating future stock prices. So to anticipate future stock prices, we will use the leading index, which is an index formulated that will follow price movements before they reach the peak and throws. This is useful in predicting future economic movements, and based on history, it is shown to be able to predict recessions and expansions. So, from the Malaysia's leading index in March 2023, the leading index has decreased by 1.2% year on year. So, from this data, this data was released by the Department of Statistics of Malaysia. So from this data, we come to the conclusion that Malaysia's economy is expected to grow at a slower rate on the third quarter of 2023. So meaning that while there will not be any recession or contraction, the economy will grow at a slower rate on the third quarter of 2023. And it is also worth noting that the leading index was, as mentioned earlier, is a combine of many important index that represent the market movement. So one of the indexes in the leading index is the Bursa Malaysia Industrial Index, which is what primarily brought down the leading index in March 2023. And it is also worth noting that Bursa Malaysia Industrial Index measures the industrial sector's market capitalization movements with a base period and the current period. So it is also worth adding that Sunway Berhad is a part of this industrial sector, which was what brought down the leading index. So there are two indicators which tell us at the moment that we should not invest in Sunway immediately. One which is the leading index, which says that the future growth in the third quarter of 2023 will be slower, and another by the poor performance of the industrial sector. However, this is not considering the company-specific information, and this is only considering the aggregate economy as a whole. So next we have the next part of the economy analysis is the interest rate. So the highest OPR or interest rate since 2004 is 3.5% in 2006. Then it was followed by 3.25% in 2014 and 2018. So generally, many economists predict that the highest the interest rate can go would be 3.25%. Currently, the OPR is at 3% after increasing 5 times at a 0.25% increment since May 2022 due to heightening inflation. So in 2023, many economists expect either another increment or the interest rate to remain at 3%. However, no one is expecting any interest rate cutting soon. So right now, the interest rate is decided by the Monetary Policy Committee, which has 3 more scheduled meetings this year. So in these 3 separate meetings in in July, in July, September, and November, there will be 3 separate monetary policy committee meetings, which they will decide whether the OPR will increase or remain the same. Since interest rate has a negative correlation with stock prices, if another increment is to happen, then if we are expecting another increment to happen, then investing now isn't a wise option, as the prices may drop or they may grow at a slower rate. So it is wise to invest only after we expect the increments to stop. So one indicator to be on the lookout for is the interest rate, with the OPR rate, which must be monitored closely, and it is wise to invest only once we can be sure that there will be no more increments. In this case, once the interest rate has reached 3.25%, we can be sure that there will not be any more increments, and it will then only be a wise decision to invest in Sunway Berhad. Okay, next for the economy analysis, we will also look at consumer sentiment index, since consumer expenditure accounts for a huge part in the gross domestic product. So the consumer confidence plays a role in the expenditure. So in the consumer sentiment index for the first quarter of 2023, the points has decreased to 99.2 points. From 105.3 points in the fourth quarter of 2022. So what does this tell us? So when the points is above 100, we can say that the consumers are confident in their expenditure, and when it is below 100%, we can say that the consumers are a little bit more pessimistic about future economic prospects. But it is also worth noting that since 99.2 is very close to 100, that there are it's not entirely a bad situation. For example, in the report by Malaysia Institute of Economic Research, it says that the spending trends are still stable among the consumers, and it is also worth noting that consumers would now be willing to spend on housing because they are expecting future prices to increase. Therefore, spending now to buy a house would be much more cheaper than spending in the future. This is kind of like them being forced to spend now rather than later, because later it will be much more expensive. Okay, in the fourth part, the real estate and property market, as mentioned just now, most of Sunway Berhad's businesses and most of Sunway Berhad's division is involved with real estate and property market. So it should be noted that 5.7%, there was a 5.7% decline in market activity of the real estate and property market in the first quarter of 2023. So the construction activity has slowed, and there was a substantial drop in the completed and started and planned units. So this can be attributed to three factors mainly. So the first one is the rising OPR rate. So the rising OPR rate has caused loans to be more expensive, and therefore they are more reluctant to buy property. Second is the consumer sentiment index, as mentioned earlier. While some of them may be forced to spend now, there are still some consumers who are unwilling to spend at the moment.
My name is Aisha Tihani binti Hussein Ahmed, and I will be presenting for the industry analysis. So for the industry analysis, I use the Porter's 5 Forces, which is a business model framework to analyze industry and a company's competitive environment. So the first is competitive rivalry, in which Sunway Berhad conducts business in a highly competitive sector like real estate, building, as well as healthcare. And because there are so many well-established players in these sectors, there is intense competition. And competition for customers, resources, and market share drives the need for ongoing innovation and differentiation. And Sunway Berhad has a competitive advantage thanks to its solid brand reputation, history of completed successful projects, as well as diverse portfolio. Next is threat of new entrants. So the threat of new entrants varies across Sunway Berhad's industries. Significant entry barriers are present in the fields of real estate development, construction, and healthcare. These barriers include high capital needs, difficult regulatory approvals, and stakeholder relationships. Potential new competitors are discouraged by these obstacles. However, since entry barriers may be lower in industries like retail, hospitality, and education, the threat of new entrants may be relatively higher. Sunway Berhad has some protections from new competitors thanks to its well-known brand, stable operations, and vast industry knowledge. Next is bargaining power of suppliers. For construction supplies, machinery, and services across all of its business segments, Sunway Berhad depends on a number of suppliers, and because Sunway Berhad operates in sectors with a variety of suppliers and can switch between them as needed, the bargaining power of suppliers is typically moderate. Next is bargaining power of buyers. So the bargaining power of buyers varies across Sunway Berhad's industry, and due to the availability of alternate projects and competitive pricing, buyers such as property buyers or real estate developers have relatively high bargaining power in the property development and construction industry. Similar choices are available to customers in the retail, hospitality, and educational sectors, giving them moderate to significant bargaining power. And lastly, threat of substitutes. The threat of substitutes exists across several industries where Sunway Berhad operates. For example, buyers have options from other developers and projects when it comes to real estate development, and patients in the healthcare industry have the choice to obtain medical care from various providers. Sunway Berhad's ability to maintain customers and market share is impacted by the availability of alternatives. Sunway Berhad must continuously innovate and provide distinctive value propositions such as sustainable designs, integrated developments, specialized medical procedures, or distinctive retail experience to lessen this threat. That would be all from me. Thank you very much.
Hi, my name is Xiaoming. I will continue on my part. Equity valuation. Firstly, the capital asset pricing model (CAPM) is a financial model used to determine the expected return on an investment based on its risk level. It establishes a relationship between the expected return of an asset, the risk-free rate of return, and the asset sensitivity to market risk, which is beta. Based on the information given, we can know that Sunway Berhad stock is considered overpriced. This is because Sunway Berhad stock is lies under the security market line. When the stock is overpriced, it creates a situation where the demand for the stock decreases and investors become less interested in buying it. Over time, as the stock price continues to fall, the point representing the stock on the graph will start climbing, moving closer to the security market line. Equilibrium occurs when the point lies exactly on the security market line, indicating that the investors are appropriately compensated for the risk associated with the stock. Next, price to earning ratio. The price to earning ratio, which is PE ratio, is a commonly used valuation metric in equity analysis. It compares a company's stock price to its earnings per share (EPS). The PE ratio is calculated by dividing the market price per share by the earnings per share. To calculate the PE ratio, we use the market price per share, which is RM 1 ringgit and 60 cents, divided by the EPS 0.1269. We can get the PE ratio to be 12.6x. Furthermore, historical price to earning ratio. The historical PE ratio compares a stock price to its earnings over time. Higher ratio indicate the investors are willing to pay more for the stock. A higher P ratio may suggest the investor have higher expected for future earning growth, while a lower P ratio may indicate lower growth expectation or potential undervaluation. Based on the chart, we know that investors are willing to pay more for the stock on December 31st, 2021. which price to earning ratio peaked at 31.9x. However, 31st December 2018 have the lower price to earning ratio, which is 11.2x. Next, earning and revenue growth. Earning growth vs saving rate. Sunway Berhad forecast earning growth rate of 7.6% per year, except the saving ratio of 3.6%. This indicates the investing in Sunway Berhad stock potentially offer a high return on investment compared to keeping funds in a saving account. Earning growth vs market. However, Sunway Berhad project earning growth rate of 7.6% per year is lower than the expected market growth rate of 12.1% per year. This suggests that Sunway Berhad earning growth may lag behind the overall market performance. High growth earnings. Well, Sunway Berhad earnings are forecast to grow. The growth rate of 7.6% per year is not considered significantly high. It implies that the company earning growth is moderated but may not be considered exceptional. Sunway Berhad forecast revenue growth rate of 6.1% per year, outpace the expected return market growth rate of 4.6% per year. This indicated the Sunway Berhad is anticipated to achieve higher revenue growth compared to the overall market. However, Sunway Berhad revenue growth rate of 6.1% is below than the 20% per year requirement for high growth revenue. This means that while the company revenue is likely to expand, the rate of growth may not be regarding outstanding. Besides that, dividend discount model, DDM. Dividend discount model, which is a method used to evaluate a company stock, it is based on the principle that the value of a stock is determined by the present value of its future dividend. Based on the table above, Sunway is not doing well as Sunway RM1.6 is trading above the estimation of fair value, which is RM0.56. The stock has an overvalue 174.4%. This means that the current market price is higher than its intrinsic value. Last but not least, price to sales ratio. If a company is not yet making a profit, we can also use the price to sales ratio, PF ratio, which measure how much investors are paying for today's sales or revenue. This is calculated by dividing the share price by revenue per share. The PF ratio of Sunway Berhad is 1.5x. That's all from me. Thank you.
Hi, so I'm Kelly and I'm responsible for financial statement analysis. Okay, you can click to this link and the income statement will pop out. So I can't do it here, so I'm just gonna explain. So based on the income statement of Sunway Berhad, the sales growth of the company is very significantly increased by 40%, and the operating income growth increased by 84%, and the net income growth increased by 130%. And the EPS, which is earning per share, increased by 78%. So this is about statement of financial position. You can go through this link to look at the balance sheet as well. So the cash and short-term investment has decreased by 11%. The short-term receivable increased by 3.82%. The total debt increased by 4%. Other liabilities increased by 2.38%. Total liabilities increased by 4.37%. And the total shareholder equity increased by 4.25%. So I have done some calculation of liquidity ratio, current ratio, quick ratio, and cash ratio. These are the calculation and these are the answers. So as well as the leverage ratio, coverage ratio, debt to equity ratio as well. And the profile margin is 12.8%, return on asset ROA is 2.6, return on equity is 5.0%. So let's come to a conclusion after we have gone through the income statement and the financial statement. The conclusion of Sunway Berhad is that it is significantly increased by 40%. It's a very good sign, I can say that. The sales growth among these 5 years, especially during COVID until now, which is, yeah, it is, yeah, great. And the operating income growth is another second bonus with a growth rate of 84%. This indicates improved operation efficiency and profitability. And last but not least is the net income growth. Sunway has achieved a remarkable growth rate of 130% in net income, suggesting effective cost management and increased profitability. So I think Sunway is a very potential stock, and yeah, it's a very good stock. That's it from me. Thank you.
Analysis of Sunway Group Berhad. So I picked two indicators from my analysis, which is the moving average and the RSI. First, I will explain on the moving average, which I choose on two moving averages, which is the 50-day moving average and the 100-day moving average. You can see the green line is for the 50-day MA, and the purple line is for the 100-day MA. From the few recent months, there is a breakout on the 100-day moving average and the 50-day moving average, looking at the recent candle, while the month of last month, we can see that the candlestick touches the 100-day moving average. Thus, from this analysis, I indicate that the chart is trying to go towards a downtrend, as there's breakthroughs on both of the moving averages. Thus, I would advise our group to make a selling position. While the second indicator, which is the RSI, which is below the chart, you can see the purple lines and the yellow lines. The RSI indicator indicates on the 70 and the 30 line, while the dotted lines, which is above, and the ones below is 30 and the ones above are 70. Thus, we can see that the RSI has no bias of overbuying or overselling. It is in a sideways condition. But in the moving average of the 50 of the yellow line, there is a breakout on the towards the downtrend. Thus, this position I will not indicate for us to buy, but for us to sell. This is the best for both of the indicators. I would advise for us to sell the Sunway Group Berhad shares in order for us to avoid any losses when we buy. Thank you.